Are we on the brink of a market meltdown?
Absolutely. And today we have analysts like Joseph Wang, David Lin, and Emily Brown to help us navigate these turbulent waters.
We've optimized their extensive analyses into quick, AI-generated summaries that save you time and boost your understanding.
So let's dive in. Joseph Wang kicks things off by dissecting the S&P 500's unprecedented winning streak.
And stick around. Emily Brown and David Hay have crucial predictions that will impact your investment decisions.
Keep in mind this content is intended for educational purposes and should not be taken as investment advice.
Welcome to Markets Weekly. Today we're analyzing the recent performance of the S&P 500 with Joseph Wang, who notes a historic 9-day winning streak.
Joseph mentions this surge is unprecedented, marking a significant recovery from previous losses.
Joseph highlights that the positive sentiment in equities has been fueled by strong earnings from major tech companies.
He points out that recent trade developments suggest the Chinese side is willing to consider negotiations, which the market reacted positively to. Joseph discusses the labor market, indicating a notable decline in the ratio of job openings to job seekers.
He also notes that rising continuing unemployment claims reflect a growing difficulty for individuals in finding new jobs. Joseph emphasizes the surprising 3% appreciation of the Taiwan dollar in a day, noting its unusual stability.
He connects this surge to Taiwan's strong current account surplus and foreign investments.
Joseph predicts that the Federal Reserve's upcoming decisions will play a pivotal role in market stability.
He advises viewers to keep an eye on economic data as it can signal potential recession risks.
Joseph concludes that investors should stay alert to labor market trends and the impact of trade negotiations.
He suggests focusing on economic indicators ahead of potential Fed decisions to navigate market volatility.
Welcome back to Trade Brigade. Today we're diving into market insights and what to watch for in the upcoming earnings reports.
Joining us is Emily Brown, who will share her analysis on potential new market leaders and the implications of the Federal Reserve's decisions this week.
David Lin emphasizes that the week ahead is crucial due to significant earnings announcements and the FOMC meeting.
Emily Brown suggests that a dovish tone from Jerome Powell may signal a bullish market response, while cautioning about potential market fears.
What are the main earnings reports to keep an eye on this week, Emily?
Emily highlights that Palantir will be a key focus, noting its growth potential.
How do current market conditions influence investor sentiment ahead of the Fed meeting?
Emily advises that declining investor confidence could lead to more cautious trading strategies.
Emily, who are some of the new leaders you see emerging from this earnings season?
Emily mentions several up-and-coming tech firms that are gaining traction in the market.
What are your predictions for market reactions post-FOMC meeting?
Emily foresees a potential stabilization in the market if Powell's commentary is perceived as supportive.
As we conclude, what final advice do you have for traders navigating this week?
Emily recommends traders stay vigilant and consider both short-term risks and longer-term opportunities for investment.
Today, we're discussing the market outlook and economic concerns with David Hay, a veteran in financial analytics.
David Hay expresses concerns about the current bear market rally and its implications for investors.
David Hay reveals that the economy is officially in negative growth territory for the first quarter.
Hay notes that this decline reflects deeper economic issues rather than a temporary glitch.
According to David Hay, the volatility of recent market behavior is indicative of a bear market rally.
He highlights how these rallies can entice investors to believe in a recovery too soon.
David Hay predicts that empty shelves will reappear due to continuing failures in the supply chain.
He warns that prolonged shortages will lead to heightened inflation pressures on consumers.
Hay concludes that investors should consider diversifying into safe haven assets and international markets.
He emphasizes that adapting to these economic changes is crucial for long-term stability.
Today, we're unpacking insights from Jeeoff on the latest jobs data and what it signals for the economy.
Jeeoff points out that the payroll report showing 177,000 jobs added in April is misleading without proper context.
Jeeoff argues that the 177,000 jobs added in April, while seeming positive, conceals deeper concerns about the economy's trajectory.
He mentions that revisions have shown earlier months reflect far worse numbers than initially reported, compounding these worries. According to Jeeoff, the job growth trend is weak, and the revisions coming up will likely present a more concerning picture of the labor market.
A substantial downward revision from earlier months could depict a much grimmer reality. How does Jeeoff explain the disconnect between soft and hard data?
He emphasizes that although consumer sentiment is declining, actual job cuts may still be contingent on future conditions.
What predictions does Jeeoff make concerning the impact of tariffs?
Jeeoff suggests tariffs may exacerbate existing weaknesses in the job market.
What does Jeeoff foresee for the labor market over the next few months?
He predicts firms will likely first reduce hours before initiating layoffs, reflecting a cautious approach toward workforce management.
In summary, Jeeoff underscores that cautious optimism might be misplaced.
Indeed, the uncertainty in the labor market and broader economic conditions necessitates close monitoring.
Today, we'll explore Warren Buffett's insights on the current economic challenges and investor strategies.
Buffett stresses the unsustainability of excessive U.S. debt and inflation as significant concerns for future economic health.
Warren Buffett warns that the current U.S. fiscal deficit poses long-term risks.
He emphasizes that without substantial reforms, inflation will continue to erode consumer purchasing power.
What challenges does Warren Buffett identify in real estate investing?
Buffett explains that while real estate can be lucrative, the negotiations and time commitment often dissuade him. Buffett elaborates on how government inefficiencies contribute to rising inflation, ultimately affecting consumers.
What do analysts predict for future equity market performance?
Experts caution about upcoming volatility due to inflation and labor market dynamics.
What do experts predict regarding interest rates based on current trends?
Forecasts suggest that the Federal Reserve may lower rates if inflation expectations continue to decrease.
How should investors alter their strategies based on Buffett's insights?
Experts recommend a focus on precious metals and cautious real estate investment for the foreseeable future.
Today, we're examining the recent stock market trends as analyzed by the host of the Technical Traders.
They point out that the Nasdaq and S&P 500 are experiencing a pullback, suggesting a momentary pause after a surge due to FOMO.
The host from the Technical Traders notes that recent gains have led to a typical profit-taking scenario.
They explain that this is common after periods of heightened activity driven by investor sentiment.
According to the host, FOMO typically indicates overbought conditions, leading to brief pullbacks.
These dynamics are essential for traders to recognize as they assess market potential.
The host highlights a remarkable rally in gold prices, noting a 2.6% increase this morning.
They suggest that gold is becoming a favored defensive asset in this trading environment.
The host explains that during downtrends, panic selling prevails, creating temporary sell-offs.
Understanding this behavior can enable traders to identify potential entry points.
Looking ahead, the host suggests a short-term bounce may occur after this dip.
However, ongoing volatility suggests traders should approach with caution.
The host concludes that investors should remain vigilant and respond to market movements.
They also encourage keeping an eye on gold and other precious metals as viable defensive investments.
What a whirlwind of insights we've just unpacked.
Indeed, each guest brought their unique take on the current market challenges.
I was particularly struck by the Technical Traders host's cautious stance amidst those wild equity fluctuations.
Absolutely, caution seems to be a common theme. Warren Buffett highlighted inflation concerns and the complexities that come with it.
And Jeeoff added a fascinating perspective on job numbers. 177,000 jobs created. Sounds good, but the lack of context is alarming.
Right? And then David Hay paints a stark picture of a looming recession. He's really urging investors to seek safe haven assets.
Speaking of safe havens, Emily Brown's focus on identifying new stock leaders is refreshing.
Yes, but it's interesting to see how she might differ from Buffett, who prefers stocks over real estate investments.
There's definitely a spectrum of opinions here, especially on timelines for economic recovery.
Exactly. Some believe we're on the brink of a downturn, while others suggest we still have time to navigate this.
If you found these diverse perspectives enlightening, be sure to give us a thumbs up and subscribe.
Your support fuels our passion to keep bringing you more insightful discussions from from industry leaders.
Stay tuned for our next video where we'll dive deeper into emerging market dynamics. You won't want to miss it.